Well, Growers Edge, I think, has made us more money by allowing me to survey the local bids that I'm in the area that I want to sell my grain. The local elevators and the ethanol plants know that this information is out there, so they've got to be competitive if they want to get the grain. You know, we've been able to maximize our return on our farm.
Good afternoon and welcome to GrainTV. It's August 5th, 2013. To my left is Logan Burgess and I'm Brock Shimino. Most of the grains finished in the red today. Let's turn over to fire tip to see how we ended. Old crop corn was down 6 3/4. New crop down 3 1/4 cents. Soybeans on the old crop down 5 1/4 cents. New crop up 1 3/4. Wheat in Chicago down 15 1/4 cents, and Kansas City was off 11 1/4 cents here today. You know, Logan, on a day when we did finish mostly in the red, seems like new crop soybeans did get a little bit of a bid.
Yeah, you know, we had a relatively volatile day in terms of that new crop soybean contract. We saw it go positive to negative a couple times, and one thing that seemed to be spurring this trade higher was some private analyst expectations that we got out today. Take a look here at this chart. You can see here we have 3 private analysts here, Informa, Doan, and FC Stone, all compared to what the USDA projected for corn and soybean production back in their July report. And I think the big thing to kind of take away from these numbers is that in general, people are expecting a higher yield number for corn and therefore a higher production number for corn than what the USDA projected in July. And it's a very different story for what we saw, or for what we saw for soybeans. We see all 3 of these private analysts expecting smaller production than what the USDA came out with in July. And in terms of yield, some yield numbers that are quite a bit lower. They're really driving those production reductions. So I think kind of the big takeaway is that people are looking at these crops both off to a pretty good start here about halfway through the growing season. But if people are looking for a little bit of a bullish surprise, it might be more likely to come from soybeans than from corn at this time in the marketing year. And it seemed like it supported price action today in Chicago. Certainly we'll keep you posted on any new private analyst expectations that come out as we move toward the August 12th USDA WASDE report. That's kind of what we're looking at from the production side of things, Brock. I know today, though, we did get some demand side numbers by way of the export sales report. What did we see there? Certainly didn't seem like there was enough to support prices.
You know, we did get the export inspections report here today, and not any big surprises there. We did see corn beat analyst expectations on the high side. Wheat was right within analyst expectations, and soybeans was right within analyst expectations as well. If we take a look at this chart, we've been following this marketing year for corn export inspections. You can see the green line is the seasonal pace we need to see for exports leaving the country to meet the current USDA projections of 700 million bushels. You can see that last bar, we did meet the expectations here this week. But for the year, keep in mind, we are about 16.7 million bushels ahead of that pace. We only have a few weeks left in the marketing year, so we could see a revision in this August report to the export sales numbers. But most likely it'll come in September when we actually revise the ending stocks and some of those other figures. As far as wheat is concerned, we know that we've had really good sales here to start out the year, although we have been a little bit overpriced in the world market. We have been losing some sales here recently, but you can see by this chart here we are beating the export inspections pace that we need to meet the current USDA projections. And currently for the year, we're about 27 million bushels ahead of the pace to meet the USDA projections. And for soybeans, we're about 20 million bushels ahead there as well, although we've been falling on that pace rather quickly over the last part of this marketing year. And this week alone, we fell 8 million bushels on that pace. With just a few weeks left, we could see a revision to the export sales pace for soybeans as well.
Yeah, certainly. We'll keep you posted on that, as I said, as we approach that August 12th report. Certainly, it seems like a lot has changed in terms of grain fundamentals over the last month, particularly from the demand side. So that report next Monday could hold some surprises, and as I said, we'll keep you posted on expectations as we move through that. One last thing here to note for today, we did get the crop progress and condition report out this afternoon. Really not a big report there in terms of what the numbers brought. We did see the corn and soybean crop both rated higher in terms of good to excellent than what we saw last week. Now the USDA pegged 64% of corn and 64% of soybeans rated good to excellent. That was up 1% on the week. Certainly now the stages of development are becoming all the more important. Right now we see 39% of soybeans in the pod setting phase. 18% of corn are now in the dough phase. So certainly, as I said, that's going to remain more important as we move forward. As we know, this crop in particular got into the ground pretty late. So although it does look good right now, certainly the progress is behind pace. Last year we saw 51% of soybeans pod setting at this time, so it seems like in particular soybeans may be susceptible to frost freeze threat here moving forward, and that could put a little bit of a bid in the market. We'll keep you posted on that here on GrainTV. In general, though, that's kind of the action that we saw here for a Monday. Thanks a lot for joining us. We'll see you tomorrow.